Hello and welcome to Leviathan News. Today is May 28th and I'm Samuel McCullough. Today I have Dio here with me today. How's it going, Dio?
Hey guys, how's it going?
It's
great. There's so much happening in the DeFi space right now that I'm super excited.
Well, just in crypto in general, but we're going to get there in a second. Let me just give a quick plug to Squid, which is the reward token for contributors across the Leviathan News Network. You may not know this, but anyone can come and contribute to the Leviathan. If you want to host a show, or if you want to contribute news or headlines or memes, clips, really anything to the Leviathan brand, come and register with the Leviathan News bot on Telegram. And every single month we drop about 1 million squids. So at these prices, it's about $35,000 worth of rewards. And we're doing this to help creators push crypto media forward. And as always, this episode is sponsored by Frax and their Fraxnet, previously Fraxtal, which is the modular rollup stack for stablecoin native DeFi. Squid is one of the premier tokens. It is the premier token on Frax. And so go check it out. You can find more at frax.com, and you can find Squid on Curve on Fraxtal. So go check it out. We just actually distributed last month's rewards yesterday. So if you did sign up for the bot, we sent you 150 squid, which is about $5. So thanks for being a contributor and also a part of the Squid ecosystem.
And I want to plug in there as well that if you're LP of Squid LP on Fraxtal, you will also get an extra airdrop. So make sure to go over. We see 53 people are already in the snapshot. So
amazing. Amazing stuff. Well, cool. Let's we're going to talk about Yieldnest at the end of the show, which has their TGE coming up on June 3rd. But let's get into some funding talk. All right, Dio. It is crazy week. Over I've been just amazed at how quickly we've seen this new narrative pop up, which is corporates taking the master strategy or MicroStrategy route and buying digital assets and putting them on their balance sheets.
Well, if I may, it's fantastic, right? I think a lot of corporates, especially corporates that are dealing with a lot of fiat, know that fiat is complete trash, and they need to get rid of it, and they need to get some hard assets on the balance sheet. That's how I think people are doing it.
Yeah, this is kind of the overall, broader theme, is that I think a lot of people are weak on the US dollar right now and are bullish on these assets, whether it's Bitcoin or ETH or other types of crypto, depending on what you're looking for. But in this past week, we've seen a massive amount of funds being raised to buy crypto, and we're going to dive into it today. So do you want to start with Bitcoin, or do you want to start with ETH today, or Trump?
Let's start with Bitcoin, and then we end with Trump and ETH. I think that's good.
Okay, so the just today we had an announcement that GameStop had bought $500 million worth of Bitcoin. They came out and announced that they had acquired 4,710 Bitcoin, which at these prices is about $513 million.
That's fantastic. That's really cool to see. It's quite puzzling that you see all these. It's basically a meme, right? But we put a meme into existence, and the meme started a long time ago, and people are actually buying into the money meme. They're saying like, okay, this digital asset stuff is pretty cool.
Yeah, it's just a little strange, right? Like the whole GME thing is. If you go back to it, I mean, as a company, especially as a listed one, they can always issue more shares. And so when they pushed the price up a couple of years ago and then last year as well, what GameStop did is they said, thank you so much for giving us these extreme valuations. We're going to do these equity sales and acquire a huge amount of cash into our treasury. And so now they've swapped a good portion of it into Bitcoin, which I don't know. I mean, it's we're going to talk more about like the risks of all of this later on, but this is like now becoming a torrential effect of companies that are swapping in.
Yeah, exactly. Yeah, I think that basically the financialization of the world that's kind of what's happening now, right? Like you can even see that with Philips. I'm Dutch, as you guys know. Philips from Eindhoven, near my hometown, and ASML and all these things. They started as companies that produce something, right? But actually now, what is Philips? Philips is just a thing that invests in technology companies and put the brands on it, right? The brand on Philips. And then in the background, they're managing a huge pile of money, right? And we can see that happening now also with GameStop. But because of the things that they did, they had a huge pile of money. Yeah, they still have some stores, I think, right? But it's not really, they're not making that much money from it. They're making more money from managing money, right? So it's interesting, and it kind of goes into what's wrong with the world, but also what kind of fixes it. And that's transparent, immutable ledgers where we can inspect people's balances. What I suspect of a lot of these on-chain buys and a lot of these companies like announcing like, hey, we're buying $100 million this, $100 million that. It's kind of easy. And I think what we will see soon, including Michael Saylor, I don't know if you saw that, he was asked on stage to prove his Bitcoin holdings, right?
Yeah, I saw that. Yeah.
Yeah, on stage. Hey, Michael, can you maybe do proof of reserves or proof of how much Bitcoin you actually have, right? And that's why we built this ledger. And it seems that people are now going around it. So I think companies will keep doing this, but I think it's also pretty dangerous because we need to make sure that it's real, right?
Yeah, so GameStop is actually down on the news. So there was an initial spiked to about $35.80. Now it's trading at $33. So apparently the market thinks that the future earning of GameStop is declining.
Well, yeah, that's for sure. I mean, the future, it needs to pivot. What is it? Is it going to pivot into a company that buys Bitcoin, or it's going to build some NFT marketplace that kind of failed, or it's going to like do something actual real, right? And how do we inspect the holdings of GameStop or MicroStrategy on chain? Right. That's why I'm a little bit more of an ETH bull, because with ETH you can make proofs of your balances and hash them privately. Bitcoin, I understand, it's a bit more sensitive, but yeah.
Yeah. Well, it's one of those things that I think that well, I don't know. I mean, like I would like to see the proof of reserves ultimately, but they are a company, they are a private company, and they don't have to do that. They can use independent auditors or other like disclosures from their custodians to say they have those funds. But oh wow, the market really doesn't like this. Look at this. GameStop's down to $32.50 already. It's dropped $1 since we started talking.
Oh my God.
Yeah, well, and this kind of like goes along with what we're going to talk about later in the show, which is there's a lot of risks that go along with this. And that the companies that came after MicroStrategy are really setting up different types of deals than what MSTR had. And the risk is that these companies, if there is a massive sell-off in Bitcoin, which we see or have seen pretty regularly in the past, they might be forced liquidators, and with their treasury buying in size and essentially with leverage as well too, this becomes a new systemic risk to introduce price volatility into the market.
Yeah, I actually make a prediction here. Like, I think we will see, and that's the next topic we're going to talk about later, the ETH treasuries or BNB treasuries, or maybe more productive asset treasuries, because BNB is you hold it, right? But ETH is a network. You can actually deploy things on it. You can build things on it. You can use it in your business, right? So I think why the market is maybe negative, it's like that's not like how is GameStop gonna make money, right? Like when you have that company that holds ETH. I didn't actually look into what does the company actually do or whatever, but you can imagine that if you hold ETH or if you hold some sort of a ledger with a productivity thing behind it, you could build things on it. And I think that's what we're going to see more and more moving forward, where people make this digital asset bet, not just because it's cool, but because they're going to use it in their business. And I think then yeah.
Well, let's hop over to the other big announcement that happened. So there was another $500 million raise. So SharpLink Gaming, this is a post that we had on Leviathan News stream, was that this company called SharpLink Gaming has announced a 425 million strategic Ethereum reserve strategy. So Consensus is the lead investor into the group, and Ethereum Joseph Lublin is actually joining the board of the company. So this looks to be this company called SharpLink is essentially becoming the massive MicroStrategy for Ethereum.
That's where it becomes interesting. If I'm actually at the correct website, yeah, SharpLink Gaming. SharpLink Gaming is
it's like a sports betting.
Yeah,
it's like
sports betting.
And global iGaming company.
Yeah, well, and I have a friend of mine. I cannot. He's a bit of an anon, DeFi whale that I know, and he's not farming meme coins or yield stuff anymore. You know what he's mostly focusing his time on? Very smart engineer. He's building algorithms to do gaming arbitrages, game book arbitrages. Huge thing, huge market.
That's pretty cool.
Huge.
Yeah. So from Bitcoin to Ethereum, these treasuries are turning to crypto in their coffers, and their funding methods are just changing radically. So if we go back to MicroStrategy, right? So MicroStrategy holds 580,000 Bitcoin, which was funded largely with unsecured zero coupon or low coupon convertibles that were periodic at the market equity sales. And so because the notes are unsecured, creditors can't really go after the Bitcoin, right? So MicroStrategy or Strategy still owns principal at maturity, so they have to pay the amount on these bonds. But the issue for them is not liquidation. They don't have to be forced liquidators, but they'll have to refinance or perform equity dilution against MSTR holders in case they needed to raise cash. And I guess that's really the difference versus a lot of these other companies that we're going to talk about, because the real risk for if there is a sharp sell-off in Bitcoin is towards the strategy holders, like the actual equity holders, not the actual company itself, which is holding all this Bitcoin. And it's a really smart move that Saylor did. But a lot of these new companies, the funding markets don't really give them the same kind of deals that MicroStrategy got in the beginning. Also, like MicroStrategy was like a functioning company that had revenues and had like it was quite a large company in the NASDAQ, but its revenues had been flat for a long time. But at least it had revenues, which are now becoming like a smaller and smaller part of its total market cap now that Bitcoin has taken such a large place. So for this SharpLink Gaming deal, they used what's called a PIPE. So that's a private investment in public equity. And so they purchased, at least Consensus purchased 69 million shares of the stock at $6.15, which is now trading at 33 cents or $33 now. Like, so.
Oh, wow.
The market liked that one. Yeah. Yeah.
Well, so basically what happened is that because I actually don't fully get it, so it's cool to pull it apart, is that SharpLink, Consensus bought shares in SharpLink, and then SharpLink bought, that's great, and then SharpLink bought ETH basically in the treasury balance.
Exactly.
Is that correct?
Yes. Okay. Yeah. So like if you just look at the stock price for this company, let's do a 5-year chart here.
Oh, wow.
This company had been trending towards zero for quite a while. The stock had been trading at $6, and looks like they probably had to do several stock issuances over the past couple of years to keep the company going. But a good return for the consensus guys, they're now sitting at what, like 5x on their investment overnight. So good for them.
Yeah, and again, I think it's different, right? I do agree with what MicroStrategy did. He uses company, he uses income, he borrowed against the future revenue, and then he bought like a productive asset, right? It could be gold or ETH or BNB or whatever it could be, right? Like any digital asset, basically. And here, this is more like a business deal where consensus, like, hey, probably, I guess, sports betting or things like that. Some consensus are working on some tooling or software, and they're working together, I guess. And they're like, okay, let's do like a strategy or some sort of a reserve in ETH, because they're potentially going to build on the EVM, I guess. And then they hold the kind of like the main asset to transact on that ledger in their balance sheet. Makes sense.
Yeah. Well, the risk is that for these companies, and I just want to bring up another one as well too. So this other company called Roxom, which had done another deal this week, they raised 17.9 million to build a media network. So this is actually a pretty interesting company. I reached out and I've been chatting with the CEO. I think he's going to come on either sometime this week or next week. And they are building a BTC-denominated securities exchange. So you'll be able to buy all types of different like securities or commodities, even derivatives as well too. But everything's going to be priced in BTC. And so they raised $18 million, and $12 million of that is going to buy Bitcoin. And probably the rest of that $6 million is probably funding company operations. So is this the new meta? Is that like if you're doing a raise, you should like tack on an extra? So if you want to raise like $6 million, you should just tack on another like 60% or like 200% on top of whatever you have. So you raise 6, but then you tack on another 12 to go out and buy Bitcoin. Just to have it, like because if they probably have some like rules within this buying that prevents them from going out and actually selling it, or maybe it has to be distributed back to the equity holders later on. I don't know, but maybe this is the new meta. It's like tack on some extra additional funds so you can essentially become like a Bitcoin treasury company in addition to a startup.
Well, all I'm learning on my side is that the crypto and DeFi was originally built by engineers, right? Like when Sam and me, when we got to the space, it was just a bunch of nerds that were actually a bit more logically thinking. Like, hey, 1 + 1 is 2, right? But in finance, when you talk to finance professionals, they can do 1 + 1 is 3, right? So
yeah, it's this raise, I think, is pretty interesting because it's different than the other ones, right? Because the other ones are like, okay, we're devoting all of our capital into buying either Bitcoin or ETH. And for this Roxom raise, they have like $12 million, which they're using to buy Bitcoin. And then there's an additional 6 that's going into whatever they're funding. It kind of reminds me of the original ICO boom when these companies were buying, when ETH was back at like $100 and they're raising like 100,000 ETH, 200,000 ETH at the time. And if they didn't use it, it just would have sat in their treasury for years and, appreciated quite a lot. And it doesn't really matter if they're successful companies or not. They end up with these like massive treasuries that like Aragon, right? This was one of the issues that we talked about last year. One of the big stories was that Aragon was, their token had essentially gone below the value of what the foundation's treasury was. But the way that they had structured the company, the Swiss Foundation had no incentive or responsibility to support the token price. So I maybe investors like buying equity more because the value of the equity is always going to be tied to the treasury versus a token, which may or may not have rights to the treasury itself. Yeah. So like looking at some of the top treasuries, right? So like Golem, let's see, let's take a look at DeFi Llama's treasury thing here. So top treasuries, right? Golem with $300 million in their treasury. Mantle with 2.5, or that's their own tokens. Here, let's sort by majors. So ENS, Golem, Lido, and Hedgic all have above $50 million in ETH. And Hedgic isn't even like I don't even, is Hedgic even a functioning project still? I don't think anybody uses them. I know I've seen some movements on their token, but that was a mid 2021 like options trading project by Molly that had some initial hype, but has not hit the same level of like distribution and market capture that some of its peers have. So, but yeah, and just to keep on going on this, right? So Blockchain Group completes a $72 million bond issuance to fuel Bitcoin buying. Like here's yet another one. This is a French-based tech consulting firm, and they're doing a convertible bond issuance at $63 million. And then also Trump Media announced that they're raising $2.5 billion for Bitcoin treasury as well. Just wild stuff. This is probably the biggest round of, outside of MicroStrategy, this is the biggest round of capital raising that we've seen for Bitcoin ever, I believe. Like publicly, especially through the corporate sector. So the institutions are here, guys. They're here. We finally made it. We have finally made it. But I guess the risk is that like who's a forced seller when things go wrong? So in the case of like Roxom, right? They just did a pure equity raise. Okay. So their long-term operating runway is dependent on Bitcoin. So if Bitcoin drops in value, their equity value is going to drop as well too. Same thing for Sharp. They did that pipe deal. We saw some other projects who have been doing convertible debt as well. And so it's we're moving towards this new wave of companies, but are they going to be the ones that get liquidated if Bitcoin has some sort of sell-off? And maybe these companies are still early, right? If Bitcoin like doubles in the next year and goes to 200,000, I'm sure they'll be sitting pretty. But the later entrants, if this is going to be the new rush for corporates to add to their treasury, like who's the latest or who's the last to enter that will eventually be liquidated? Right.
Yeah, very interesting.
Yeah.
Worlds are merging. We're merging together the traditional financial world with decentralized financial world. All I can say is that all I can say is that basically I do think we need to get more things on chain, because indeed the traditional financial world with all these deals and when also for projects when you're dealing with centralized exchanges, it's very political, very dramatic, very painful, and we need to go on chain.
Yeah. I guess with the one thing that we can say about all of this Bitcoin that is being bought right now, like once it's in the company treasury, there's now really solid and liquid deep lending markets that they can access in case they need funding. There's a plethora of lending protocols or companies out there that are more than willing to lend against Bitcoin now. And so even though they're buying $2,400,000 with Bitcoin, they might, if they need cash, especially if you're a company like Roxom or something, you could always use that funds in your treasury to take a loan against and add more leverage into the system, which is one thing that we love is in crypto is just adding more leverage to everything. All right, so let's just leave it at that. We had a couple of other raises. Plasma raised an undisclosed amount from Peter Thiel's founder fund to grow the Plasma network. This is a network that supports Tether specifically and provides 24/7 global settlement of Tether. So pretty cool. Nice to see them do that. We also had Beam as well too. They raised a bit. I believe they raised like seven. Or wait, I don't think it was disclosed about what they raised. But this is another one of those like stablecoin infrastructure projects, like we talked about last week, that provide payment networks, ACH, compliance. It seems like very popular at the moment with all the stablecoin as a service platforms that are coming. Yeah. So there's some other small like DeFi stuff that got raised as well too, but those are the big ones for the week, and I think that's just shows a clear shift in what these corporates are doing. I mean, it's a really fast wave of news that we've seen.
Yeah, space is changing rapidly. The big money is getting in, and I think it's more important than ever that we do keep things also on chain. As I keep saying, as we can already see, MicroStrategy is like, yeah, well, I don't have to prove my balances. It's okay. I don't have to show proof of reserves. It's fine. Just trust me, bro. Like,
yeah. So I wanted to let's shift to this. Okay, so have you seen this meme of the like Westchester mom with her 3 kids, and it's like, Mom, how did we get so rich? And it's like, your dad charged 2 and 20 to underperform the S&P 500. Like, what's the crypto version of this, Theo? Your dad launched a L2. Is that it? Yeah, like your dad launched an L2 and exited after a year and a half once the vesting was over.
Underperformed the S&P 500, yeah. Well, I think value, it's kind of funny, right? Like money or value or other things is a very weird human like construct. And we like, I know people that are billionaires, and they're most stringent people that you will ever meet. Right? So that is just like, and they're not happy. A lot of these people are not happy at all. So they're sitting on all that money, not necessarily happy. So it's a interesting thing. I think the more thing what we should go to is not strive for riches, but strive for like trying to indeed have like financial freedom, have a way to park our wealth, and have a way to work together, and to make these value flows in a more sustainable manner, right?
Yeah. So let's talk about you. How have you been? Tell me about Yieldnest.
Yeah, it's been. Sorry, I'm dealing with another thing here. It's been quite intense. We're gearing up for our TGE, and I'm a DeFi builder. I work with a lot. I like to work with logical things. It's been great, but it's been great because we get a lot of attention right now. We get a lot of eyes on the protocol. I'm very happy with the tech stack that we eventually have delivered. I'm so happy after all that work that we have delivered now a new vault architecture that can be used to structure duration risks and to structure different protocols, right? So it's really happy for that. And the products are ready, the tech stack is ready, and we're going to release our governance stack, our governance token, in collaboration with Aragon V2. And I'm very excited. It's going to be another VE model. Very proud that even Michael Agroff did a retweet when we announced that was another VE, that we also were using the VE vote escrowed model, which I think which I think is basically a great way to separate speculation and protocol usage, right? So we're really focusing on that as well, because in crypto we all love to speculate, but there's also people that use the protocol, and we're very excited to release our governance stack. I'm very excited to see what's going to happen. I think doing a TGE is just embracing entropy, right? And it's been the last time building it feels basically like staring on the abyss and eating glass, right? That's entrepreneurship. A quote from Elon Musk. And that's what this has been. But I'm very positive, very happy, very motivated. It's very exciting. Next week, Tuesday.
Next week, Tuesday. Wow, that's right around the corner. Are you excited?
Yeah.
No, are you excited for all this?
Yes, very excited, very pumped. I'm looking forward to release everything. I'm looking forward to working with everyone and see embracing the entropy, because that's basically a TGE, right? There's so much entropy, randomness. You don't know what's going to happen, but I do feel it's a good time. The market is looking good. The sentiment is good. So exciting times.
Yeah, I know we talked about this last week, but you guys are at $500 million as well too.
Yeah,
and climbing higher and higher every day.
Exactly.
Yeah. So if anybody hasn't done so far, I mean, you can come to Yieldnest and come deposit some assets, get some YN ETH or YN BNB. There's actually quite a lot that you can get. And
if you go to the YNEFX page, we actually just upgraded the UI. If you go to stake, and then max RTs, and then click YNEFX. Yeah, you can see. Yeah, so we upgraded a bit of a price chart with the yields. And if you scroll down, I think the most important thing of this is asset allocation. If you scroll down a little bit more, so basically what we built with these modular vaults, we can basically replace strategies while things just keep going, right? We don't have to pause it. We don't have to, new strategy. It kind of is a self-evolving yield strategy. So obviously, YNEFX only has like ETH yield, so it's all ETH denominated, or YNBX BNB denominated. And we can stack duration risk, and we can stack new strategies in here. This is all done, will all be done by governance when we release a governance stack. And every new strategy gets onboarded, updates the transaction guard logic, and then only assets can only be transferred to the strategy endpoints, basically. And that removes the biggest problem in DeFi, and it's a really big issue. Like when you, we basically built on the 4626 vaults, right? When you have these 4626 vault and we change things, and we have boring vaults, people that are in the space probably know that. That's like a lot of off-chain compute. But if you do any mistake, wrong transfer, there's a lot of things that could go wrong. So we spend a lot of time fixing that. And actually, that's also from the origins of restaking, where we were like, okay, we want to structure products. We want to combine these different components. And we kind of solved it in this new technical way, basically. Yeah,
that's pretty cool. Yeah, this is really nice. I like to see this with like the asset allocation stuff. It's pretty cool. I'm really excited for you guys for this to come out next week.
Yeah, be ready. It's going to be epic.
So I wanted to just touch on one last thing. So you guys were mentioning that you're pursuing a VE like locking strategy.
Yes.
Can we like pour one out for the original VE CRV whitelist?
Yes, I love this. Well, there is a kind of good reason for this. It's because, and I understand why Curve is doing this, but I'm not sure what I'm saying is correct, right? So I have nothing to do with this, but I think because of the Petra upgrade, you can actually trade accounts now, right? So, and I was thinking about this. If you look at the packs of CVX, CRV, or others, they should actually be restored because of this, in my opinion.
Yeah, here it is. Community discussions about the implication of Petra upgrade, and it may make it possible for smart contracts to circumvent the whitelist. So EIP 7702 allows EOAs to set code in their account, blurring the distinction between EOA and contract.
Yeah.
So it's just, we finally get to the point where the whitelist, which was one of the most important determinants of who had power in DeFi for years.
Yeah, it's a bit scary, right? Because it is not really a. It's kind of because of the Petra upgrade. Obviously, the Petra upgrade doesn't really think about what is the implications for us VECRV, right? But I think it's really good that they released this like this, because if they wouldn't, there could be an attacker that does something, right? So it's a lot of theoretical possibilities, and I think by removing this whitelist and having others like trades, the VCRV, etc., it does become a little bit better to defend. But I didn't read this specific article by Lama Risk, but yeah, I think it's good that they do this, but it's also scary. Yeah.
Just for some stats that Llama Risk provided here, 70%, so 2.2 billion of the 3 billion CRV has been emitted, 70% of the total supply, and 39% of that is currently locked. And so the risk of any sort of negative events happening due to this change has diminished quite a bit. So we can see here where the VECRV is presently comprised of. So Convex has 51%, StakeDAO has 14%, and Yearn has 10%. It's just wild to think that like Yearn was first mover on all of this and now only has 10% of VECRV. That the Convex model was just so much better than the Yearn model at the time. And then here we are. So a good chunk, probably a huge chunk of all CRV is permalocked. It's never coming out. These liquid lockers have done a great job of locking it into their ecosystem. And so now unlocking it and saying, oh, hey, you know, we just get rid of the whitelist. You know, here we are.
I wonder actually what kind of implications this has for CVX, CRV, or Yearn.
Probably not much, because I don't think there's much CRV that can be acquired in size. I think this is what they're saying, is that because there's so much CRV that's been admitted now, like acquiring enough to outvote Convex and Yearn and StakeDAO, plus some of the other large holders, is going to be impossible at this point. So it's okay if we remove the whitelist.
Yeah. Well, and it's also kind of forced because of Petra.
Yeah, exactly. But I mean, this is one of my, if we had to redesign the CRV system, I think you would allow smart contracts to have access, because we didn't have widespread safe usage when Curve was launched originally. It was just EOAs. Like, who was using safes at scale back then? No one. And I think Michael designed it in that way. I still have like one of my older EOAs with like a couple, like $3,000-$4,000 worth of CRV locked until 2028.
You need to use the system. So to use Curve and to do certain things, you will have to buy a little bit of CRV.
Yeah, but I guess it's just indicative of the future where all UA is like, the line between EOA and smart contract just is blurred. And as we get closer to like full account abstraction and wallet abstraction, then the necessity of having this type of whitelist just diminishes. So it's a bellwether, a good one, I would say. Mm-hmm.
Yeah, it's definitely progress. It just kind of increases the design space of things we can do, like 100, 1,000x, and I think we just start to see the first kind of things of this, and I think a lot more innovation and new protocols will be emerging very soon.
Oh, one last thing to talk about before we get out of here. So did you see this thing about Telegram?
I don't know.
Okay, so this is quite possibly one of the biggest stories of the year. Telegram and And let me pull this up. Okay, what happened to my screen sharing? So Telegram and XAI, so Elon Musk's AI company, have signed a 1-year partnership to bring Grok to Telegram and integrate it across all apps.
Wow.
So Telegram's going to get $300 million in cash and equity from XAI, plus 50% of the revenue from XAI subscriptions sold via Telegram. That's a huge deal.
What?
Yeah. It's massive.
Oh, well. Okay.
I am just a little perturbed and worried about this, because this deal essentially means that Telegram sold its information to XAI for data harvesting. Very smart from Elon, right? He already has all the Twitter data, and now he's going to be getting all this Telegram data as well too. And Telegram's not an AI company, so huge win for Elon here.
Yeah, I'm actually using X quite a lot lately to help me with just messages or things. It's very, very useful. I'm quite worried about the grander implications of this. If you have a messaging app, Twitter, well, for me, my life is just Twitter and Telegram. Mm-hmm. That's my social life mostly. So I think most crypto people, I guess, and maybe a lot of people, right? Like, so it's like it will know everything you're doing. So
yeah, let's run through the. Okay, so first of all, it's penned for all users. Let's go back. Let's take a look at this video. If I
didn't know this. This is huge deal.
Sorry, let me see if I can make this. Okay, so Grok is going to be pinned for all users, right? That's one of the first things. Okay, let's see what's next. Accessible via search. So every time you search, there's going to be a Grok. So that means that anytime you search anything on Telegram, it's going to pass that information to Grok so it can search for you. Best in class threaded chat experience. So remember all those chat bots that like we're looking at your public groups. Now you can just use Grok to send all that data to Elon and he'll send you a summary back. Or maybe this is just like Grok AI. This is okay. I'm sorry. Maybe I don't know if it's taking data from public groups or maybe not. Who knows?
Wow. Let's face it, right? Like
smart text editing. Okay, whatever. Oh, here we go. Chat summaries. Here we go.
Takes all your data.
Yeah. Takes all your data. So Telegram sold all of its data to Elon for $300 million in cash, plus 50% of the revenue from Grok.
Oof. Yeah, I remember when Telegram started, it was actually a privacy app, right?
I'm sure there's some stuff in it as well too. And we also saw that Telegram, I think it raised $1.2 billion. Let me just check this.
Wow. Yeah, that is pretty cool. Like, I mean, the Ton blockchain is also quite integrated with Telegram, and there's basically an EVM version of it, and Curve is also deployed there. So soon maybe we can do all our DeFi interactions and via our AI agents via Telegram that manage our portfolios.
Yeah. So link insights as well too. Group chat moderation. Wow. Okay. So wow, it's going after the group chat moderation. That's a huge like subsection of Telegram's like independent businesses. Like Rose and all their like group chat
moderation. You also have
that.
My Telegram. I mean, I have so many groups nowadays, but like the thing, my Telegram box crashes, slows down. I have a lot of issues actually lately with Telegram, even though I'm a premium user of Telegram, but it's yeah.
So Telegram is set to raise. So the Wall Street Journal reported that Telegram is set to raise $1.5 billion in a bond issue as soon as Wednesday, and BlackRock, Citadel are among the buyers in that. It's going to pay a 9% yield, and they're going to use the proceeds to buy back remaining debt from its bonds issued in 2021, which were due to mature next March. So Telegram is projecting a profit of more than $700 million on $2 billion of revenue in 2025.
Yes.
Good job, Durov. Well, cool. Yeah, I think it's probably a good place to wrap up. We love Telegram and we love building bots. So you can check out the Leviathan News bot at Leviathan_news, and then you can come find our bot by clicking on the little robot. And if you do sign up, we actually just send a little airdrop of Squid out to everybody that ever signed up. So congrats to everyone. It's on Fraxtal. You can go check.
Amazing.
Yeah. Well, Dio, good to see you. I hope everything is good in Thailand.
Yeah, no, it's great. It's not see much sunlight. It's just 24/7 working, but it's good. I'm very excited. I feel good about the market. I think with all these pressures, right? We just discussed about Telegram and all these AI overlords things coming at us. I think at some point we go back to our core of our industry, I hope. And until then, I do think we will also see a lot more interest in general into crypto markets, and people will be like, hey, wait a minute. So
Yeah.
I'm quite excited. Yeah.
Yeah. Well, here's to the coming corporate boom and Telegram taking their data. But they already had it anyways, so you can't expect any sort of privacy in 2025 anymore. All right, everybody. Thanks everybody for joining, and we will see you next week to talk about the next round of funding. This is now like our Wednesday show, so maybe tomorrow we'll have the Roxom people on. Maybe next week. Oh wait, I'm sorry. I believe 40 acres is coming tomorrow. So we'll have more about that, and we will have more on Friday. Garrett's going to have a llama party. It's coming, so tune into that, and